Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening, and we're here on Tuesday, the 7th of May, 2024, and the time right now getting just past 6:25 p.m. Central Time. So we have an interesting set of events going on. As you know, the Israel-Hamas war is there. Everybody's in Cairo trying to find out if they can get the wording done for Israel and Hamas to come to an agreement. To add, if you will, might to Israel's position, they invaded another area this morning, and took over the Rafah crossing. And if you saw the amount of tanks in my newsletter this morning, I put in a picture of the amount of tanks, just partial, that were there. I think I counted 25 or something. It was pretty crazy with all the soldiers and all. They made a statement, but it was surgical. They didn't go in to kill a lot of people. That wasn't the goal. The goal was to put them there and let Hamas know, we are on your doorstep now. We are coming in. Either we get a deal or we don't, under whatever terms. And I don't know what those terms will turn out to be, nor do you. I mean, this is a fluid situation. My guess is it will be more on Israel's term set because they are the ones with the power in this negotiation, not Hamas. In American campuses, we're watching the dismantling. I know here at the University of Chicago dismantled, Northwestern, the Art Institute. So those things are coming down. And as I said, they have their own course of life. They'll all come back if nothing gets done between these countries for the Democratic Convention. And unfortunately, I could walk there. Really, I could walk there in 10 minutes if I walk slow. So we are concerned as to what's going to be going on where we live in the city. All right. So that's that part. The other part that you have to understand is what happened on Friday. On Friday, we got a jolt in the market when we got a jobs number of 175,000, when we saw monthly and yearly wage gains fall by 1/10, and we saw unemployment go up by 1/10. That's everything the Fed wants to see, and the market reacted. So what did we just get? We got 5 days up in the Dow, 4 or 5 days up in the S&P. Yeah, it makes all the sense. The markets were rallying going into it, and they certainly had reason to rally after it. Now the question becomes, is good news for the Fed bad news for the economy at some point? What do I mean by that? If you keep losing jobs, if the consumer spending is, how do I say this, more fragile, more selective as to what they're doing, what does that eventually do to the market? Does the market give us that sell may go away for the summer months? Don't know, but it's something you got to think about. When we look at the S&P, the correction carried on a weekly basis to the 18-day average and gave you a bounce. Now, to know that the market's going to keep running, you obviously got to take out a prior high. Otherwise, if you get under this low after doing this, you can make an argument. Just think about it. On a closing basis, lower highs, lower lows, and if you close under that break low, you're in a full-fledged downtrend. Just something to think about. The bounce in the market is pronounced. Now, I did my gold chart, and gold looks very different than this. This chart is giving you higher lows, higher highs, bullish. The old highs are up here. Is this market worthy of making a new high? That becomes one question. You know, the earnings season is going out. There's one common theme. If firms are missing, or if they're putting out terrible guidance for the next quarter, real warnings, they're being punished. So be careful here. That's what the market seems to be doing. But way more firms are advancing on earnings than are losing. But this is an uptrend in a market. The market fought a battle between, and you were there with me as we were talking, between the 100-day average and the 18. It kept narrowing it in, and then it pushed it out. Remember, you got to go back to where this market was on Friday on this jump when it finally cleared that. And this has been the follow-through that you've had because of the jobs report. You're at an area where it should stop. That doesn't mean it has to, but you've rallied back to the key resistance of the Bollinger Band. The Bollinger Band is an algorithm designed to make the market trade within it 95% of the time. This doesn't mean it has to stop. 95% is a good percentile. I can live with that. So I think a lot of the algo traders, the program traders, they put these numbers in there. You could hit the band and still fall. You could hit the band and rally, but you often hit it, you bounce. Well, we could do that. But do I think it's just ready to pick up and run and go through these highs? I do not. Could I be wrong? Of course. Would I tell clients to go short on that? No, that's not what it is. It's to come out of longs, not to go short. There's a huge difference. My guidance for going long or short typically is you need the market to get buy signals over the 18-day average, sell signals under it, and you look to the swing line to do that and what the slow stochastics are doing. It's actually a pretty simple technique. So as I look at the markets bouncing back and forth, I say, okay, we're in the resistance zone. The momentum is overbought, not embedding, not even trying to at this point. I think that some profit taking take place there. I think in the micro mini Dow, you've got it. You've got your 5 days up. You're there. Now we'll see if on a break, the 100-day average can support the market. Generally speaking, generally is a big word. First moves over a 100-day average. The first time it hasn't hit it in a while, often don't hold on that first challenge. So we'll see if I'm right on that as to what it does. In the Russell, overbought, not embedding, up to the resistance. So they've all done the identical thing. Now we have the flip-flop of this on interest rates. They have gone to the upper Bollinger Band and overbought. In other words, rates are falling. And that's what I mean by flip-flop. This is an inversion market. The higher the futures prices go, the lower real yields are going. So this market's fighting a resistance point right here. Will the market come down? Well, you lose the uptrend if you get in the 10-year note, in my opinion, under 108 and a quarter. So I'm watching that closely. But from where you're at, it's not that far. It's 10, 15 points, no more than that. And in the 5-year, 105.20. Get under that level, and I can see the argument. Both are in overbought areas against their upper Bollinger Bands. There's a theme here. Stock indices rallied up to their bands. Bonds and notes rallied up to their bands. In the dollar, you fell. You pulled the plug on the dollar bull. And it fell down to the lower band, and at the same time, the euro went to the upper band because, well, if the dollar's falling, we're stronger. But here's what's wrong with that thinking. Come June, you're going to see that the euro is going to start cutting interest rates. I mean, I just keep looking at the daily data that's coming out of Europe, and I haven't seen anything to say that they should stay where they're at. So my guess is at the June meeting, that's what we're going to run into. Support temporarily is back at the 18-day average. The market, if you look at these numbers, you still have one of them over the 70 level, overbought, hits the Bollinger Band and backs off. British pound. So I said yesterday to you, I don't understand why this rallied when I saw how the conservatives have just done. I mean, they got their butts kicked there. So the market is pulling back. It rallied nicely past the 200-day average right into the Bollinger Band and coming down here. The trend is up. Support tomorrow is going to be attempted, I think, by the pros at 124.86, and they'll probably throw in the towel if you get under 124.69. Do I think the Bank of England wants to make a move? I think they would like to, but I don't think they're going to, and they're up, I think, next, I think it's May 9th that they come up at you. In Bitcoin, all you did is get a bounce back to the resistance point of the 18-day average of closes. So you got oversold, you hit the Bollinger Band, you bounced away, and you hear me talk that line in the sand over and over. And that's what charting is. In my charting course, if you go to our website under education, I take the name of the chart off and I take prices on the side off. In the videos, I teach a number of them that way, and you're going to say why. I don't want you to have an opinion of price or what that is. I want you to trade patterns. And if you could get into patterns and understand that you got just 5 pieces that I put on a chart, you're not seeing window envelopes here. You're missing another key moving average. I don't put them in this. I keep that for my subscribers. And we go over and over looking for the same thing. This is not about trying to catch day trades every day. I know some people like to do that. I'm not that guy. I am more about in the futures market being called a swing trader. I have nothing wrong getting into a market and holding on to it weeks at a time. Or if I'm wrong, right away you're out. But if I get right, I start peeling parts off in my recommendations. I use the same theory in my ETFs. We're still in trades on that from December. So that just gives you an idea. Different leverage, 90% here, 50% stock market, changes how things work a bit. When I look at the Brent versus the WTI oil, well, I see support in the market back at the differential of 503. But when the market's up like that and over it, generally Brent is stronger than WTI. Both have been in downtrends. Why? Peace will do what? You're going to get more oil into the Red Sea. It's going to hit, and you're going to get a flood of oil. You're going to cut 3 to 5 days off of many of the shipments that would normally go through the Red Sea. The costs will be less. You'll actually have more tanker availability. It changes the equation. At the same time, remember, we're walking into a June meeting. Mr. Novak from Russia, their oil minister, came out today and said they are not looking to make any change in oil production at this meeting. So he's giving you an idea, at least from Russia's point of view, where they're at. And I've heard that from a couple of the others. Look for support in this market right here, the combination of the 200-day, the 100, and the Bollinger Band. That's the logical support. You had an outside day down today. Outside days are super important. You don't want to take out the high of an outside day within 2 trading sessions. Why do I say sessions? It could be a weekly chart. It could be a 15-minute chart. It could be a day chart. If that's taken, I teach in my charting course what that means. I'll leave it at that. When we come over to the WTI, I've got the same thing. Identical type of support. They're mirror images right now of each other. If you take that out, it's an idea of something wrong. Now, when you wake up in the morning, I'm going to repeat. If you all of a sudden see the energy sharply higher for any reason, it probably means the talks broke down between Israel and Hamas. And it means that oil shipments are going to stay curtailed, blah, 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 all the way through. If you come in and it's down sharply, it probably means what? This could be the final bit of a wash. I don't expect prices to crash very much in this because if you look at where we're at on it all, lower prices of interest rates around the world once that kicks in is meant to spur economies, not shut them down. You're at the other end. You've gone from here up to here and you're about to cut. If you start cutting interest rates, spurring demand for oil. Just think of it that way. Gasoline still continues to get itself beat up. The interesting thing is, if you're a seasonal trader, the 7th of May is the buy day for one phase of this. It kicks in today. It's very short. It's not a long summer phase. Another one's coming up. So this break fits in with the market trying to find some short covering down here. Last, natural gas, I'm now of the opinion, join the camp that a low is in place. This is looking to me more and more like a base in the market. Yes, I expect resistance on the first challenge of a 100-day average that you hadn't hit this whole year. Got that? I mean, the whole year, you got to go back well into 2023. So that's normally a resistance point, and that's where I think pros are taking some money off the table. I talked this in so much more in our reviews. You know, I keep talking about our free offers, and one of the things I wanted to do is put the offers up here so that you can see them in a neat way. And as you look at these offers, this is the trial to my ETF video that goes in the morning. Now, I record this particular video at 9 in the morning, and it's out for you probably 9:30 or so. I like the first half hour of trading to go by me. But these are all the offers, the QT Market Center. Then we have our Ira chart software that you see right here. We have 2 different versions. One is internet-based, if you will. The old, you download it. The other is web-based, so interesting. Access to daily price counts, okay? And this is cool stuff. I use price counts all the time. It gives me an idea when a trend kicks in what they are. See how it's saying on each one of these, select this offer? Because when you go to the page on our website that's behind me, you just click those off, but I'm just showing you what they are. So often I can't show them all, and I said, hey, let's create something you could see. If you want these, you just go to iraepstein.com where free offers are. There'll be an icon up here, by the way. All you have to do is click it if you're on a PC that you can go with. That's the seasonal trades that I use, and I use them over and over. I do not believe that you trade off seasonals. I think they're another tool with what you're looking at, period. This is at the end when you're finished. You drop down on the page, you're putting in your information here. If you have any messages for us, you put them in, you hit send, we get it, and we send things right on out to you. Could it be simpler? I don't think so. I'm Ira. You have yourself a great evening. I'll catch up with everybody in the morning. Take care.